Cassiar Gold, we are a Canadian gold explorer. We're focused on our flagship asset in northern British Columbia, the Cassiar Gold project. This slide highlights kind of the 5 key pillars that make our company quite unique. Starting on the left, we have a team that has a track record of discovering, permitting, building, operating, and selling billion-dollar gold projects, not only in British Columbia where we're focused, but really across Canada and the world. Second pillar is the infrastructure. We have a pretty massive district of almost 60,000 hectares with 5 past producing mines, and because of that we have a wealth of infrastructure. We have a paved highway bisecting our property, we have a paved road going straight to our deposit, we have water, power, a fully owned and permitted mill, access roads, tailings facilities, underground workings, you name it. It's a massive infrastructure advantage that allows us to operate very efficiently today and really lowers the barrier for development. The third pillar is the resource. So we have a pretty sizable resource already. We have a combined resource of 2.3 million ounces at over a gram per ton, right at surface and open for expansion. Lots of satellite targets around it and 4 additional past producing mines for a lot of exploration potential. The fourth pillar, we are based in a Tier 1 jurisdiction. Geopolitical risk is very high right now. So we're very happy to be in a safe jurisdiction in British Columbia. We have mine permits already in place, and we have full Indigenous community support as well. So we're blessed and very lucky to be in such a position. More importantly, we're quite undervalued. Our market cap is slightly over $60 million Canadian, which for where we are right now in terms of the resource size and the infrastructure and the exploration stage, it's quite the opportunity when peers are trading at multiples of our valuation. How much we are undervalued really is highlighted by this slide. You have several of our peers here, some closer to our stage of development, others more aspirational, the ones on the right. But you have on the bottom the stage of development for each of these projects, right above it the ounces, right above that the market cap for each of the companies. And then on the chart you can see on the dots the grade for the different resource categories, which we compare quite well with most of our peers. And more importantly, the enterprise value per ounce on the ground. You can see also by that, by the market cap, we're quite undervalued, and there's quite a bit of upside on what we have already, let alone what's coming in the future. So to talk a little bit about our project, we have, as I mentioned, a very massive district, 59,000 hectares, contiguous land package, 100% owned, roughly 27 by 25 kilometers. That's bisected by Highway 37, which you see in that black line there. North of the highway we call the Cassiar North Project area, and south of the highway, Cassiar South Project area. The north is, for the most part, comprised of bulk tonnage, open pitable, near surface targets running around 1 gram to 1.5 grams or half a gram to 2 grams, similar to the Taurus deposit, where we have the entirety of the resource, which you see there in pink. And several other outlying and satellite targets that we see the potential to add to what we already have in terms of the Taurus deposit. So a lot of bulk tonnage expansion optionality or potential to expand and discover there. In the south, we have a slightly different style of mineralization. So here the grades are substantially higher. You can see there 10 to 20 grams per ton. We have 4 past producing vein systems there, all of which are open, all of which we have extended to our drilling, confirming these type of grades, and all of them remain open with a lot of room for discovery of parallel and stacked veins as well. So quite the opportunity. These veins are on average throughout the south about 3 meter thick. So nice widths and nice grades, and this is also where we see a near-term development opportunity by leveraging on the permit, the mill, the infrastructure that we have. That puts us in a very unique position to get to cash flow sooner in this part of the property, rather than on the bulk tonnage, where we see a more 5-year timeline to get to a development decision. Very important to highlight as well, I mentioned this before, we have 2 mine permits already in place. It's very, very important to have these. British Columbia, it's not known to be very fast to permit, so having these 2 permits put us in a unique development or re-permitting or permitting path. We have in orange the Taurus gold mine permit covering most of the Taurus deposit and 2 tailings facilities, and then we have in the south the Table Mountain Cassiar South mine permit for roughly 20 square kilometers covering the 4 past producing vein systems, the infrastructure that supports it, 2 tailings facility, and the fully owned and permitted mill that we have, 300 ton per day, that puts us in a very unique development optionality as well. So starting with the Taurus deposit, that really is the foundational deposit from which we want to continue to grow, and where we see a company making assets. As I mentioned, we see the resource there combined into the 2 resource categories. The combined resource is 2.3 or just over 2.3 million ounces at a 0.4 cutoff grade. Mineralization outcrop starts at surface. There's on average about 10 meters of soil overburden. The deepest point of the pit is about 307 meters, but 91% of the ounces occur within 150 meters from surface. So it's very shallow deposits. It's open for expansion laterally and at depth. And it's also a deposit that's seen 35,000 ounces of production back in the 80s. That gives a lot of comfort and knowledge about this type of mineralization and its processing styles as well. As I mentioned, the Taurus deposit is open for expansion laterally and at depth, so we don't know where the limits of that deposit are, but we also have several targets here. These ones that you see on the map, Hopeful, Auroch, and Newcoast, just to the south and to the east and southeast of the Taurus deposit, about 1, 2, 3, 4 kilometers distance. We see mineralized outcrop with grades similar to Taurus throughout. And the drilling also confirmed that, so that's indicating we have potentially a much, much larger system that we have currently defined. This is also confirmed by drilling. We've completed over 7,000 meters of drilling last year. As usual, we're a little bit spoiled. We hit gold in every single drill hole. We've released all of them already. We put roughly 2,000 meters for step outs of 3,210 meters at Taurus. With great success. We also put 11 drill holes at Newcoast, seeing broad widths of mineralization at Newcoast there, about 2.5 kilometers south of Taurus, and also intercepts of narrow, high-grade veins as well. It's a very sparsely tested part of our property, but where we see a lot of promise and a lot of similarities to Taurus. Not just at Newcoast, actually the similarities that we see similar style of veining, alteration, and mineralization in targets like not only Newcoast, we see at Lucky, we see at Snow Creek. So we do have a big pipeline of targets to grow on the bulk tonnage targets and grow our bulk tonnage resource, and that's something we'll be looking forward to continue to expand this year, in the coming years as well. Where we see really the big tonnage and potential, also that the majors are, and the mid-tiers and the big producers are really interested and excited about. Other than that, we also have the Cassiar South area where we have those 10 to 20 gram per ton material veins. We have a lot of infrastructure already in place there, 17 portals, 25 kilometers of underground workings, power lines, a mill, access roads, tailings facilities, a really massive advantage. You can see from the table here in blue the historical production from those 4 vein systems. The main mine is roughly 5 kilometers south of Taurus. The Bain mine, which is the one further south, several kilometers south of it, maybe 10 kilometers south or 11 kilometers south of Taurus. So all of these veins are open along strike and down dip. And there's a lot of room for parallel and stacked vein systems here. So there's a lot of potential to continue to expand mineralization and use that material to, feed the mill that we have, or also feed a larger operation as well once the bulk tonnage in the north is in operation. You can see some of the intercepts we had as an operator in the south here. Some very exciting, eye-popping intercepts. And these ones are all from us as an operator, 4.8 meters at 35 grams, or 3 meters at almost 26 grams per ton, or 2.2 meters at 33 grams per ton, just to give you, a few examples. So a lot of room for expansion, a lot of room for discovery as well. It's a big system with a lot of prospectivity. In terms of catalysts, we already released our drill results. We're going to be announcing probably at the end of Q1 metallurgical testing or metallurgical results for the Taurus deposit, and we're going to be using that to feed into a PEA that we're looking to release probably towards the end of Q2 as well, and that should be a major milestone for the project, where we're going to be finally putting preliminary economic assessment on this project with all these massive infrastructure advantages and a really substantial gold resource at the very, very high gold price. So very excited for that. We're also expanding our strategy to looking to potentially monetize the tailings that we have, to also look into the high-grade veins for, to really explore and put potentially a plan on how to get that high grade into production. So a lot of exciting things coming this year. So just to recap, a lot of infrastructure and permits in a safe jurisdiction, a substantial resource with a lot of expansion and discovery potential. We have a team that has done this before in substantial scale. We operate in the highest environmental standards. We are, full community support. We're quite undervalued. Our market cap is just over $60 million, which is quite low for what we have when we compare it to our peers. And big leverage to the gold price, and also a lot of development optionality as well, both with the high grade as well as the bulk tonnage. So I hope you can come and learn some more. We're in the booth there, or reach out via email, or so just make sure to reach out. It's a great opportunity, and thank you so much for listening.